Good evening to all of you. Welcome you to today's webinar. Today the discussion is going to be on intraday trading plan and how to prepare a trading plan in order to implement, because one is the preparation, then of course the implementation, execution, and then holding really steadfast on our on the plan, because sometimes we can get wary about the plan that we make. So we need to identify what are the elements of a trading plan. So it could be for intraday trading plan, or it could be for the positional trading plan, right? So any intraday trading plan, you can most important thing that we have already discussed are the trend identification methods. Then of course you must know where to buy and sell and how to take profit, and also where to put stop loss. What is the probability of success of that particular thing? So these are very important elements of a trading plan. So we will use very simple methods to see how we can work out a trading plan. Now you must know that in any plan for that matter, or in any trading aspects, there will always be some possibilities of losses. So just because we make a trading plan, we should not expect that 100% of the time it will work. You should be happy that if you can get something like 70-75% right, and remaining 20-25% you contain your losses. So it is like a battlefield. So you cannot expect to win every day, and there will be always losses going along the way. So it's the overall profit and loss which finally gets you some money. So that is the aspect of the that first thing has to be borne in mind. Second thing, for those who are investing positionally, or for those who are doing investment, they need to be patient. They need to be convinced about why they are buying a particular stock or a particular index at a particular level, and they should be quite convinced that that particular level should hold and should be in a position to make profit over a particular period of time. And second thing, if things go worse, then to what extent they are protected. So these are very important aspects of any trading plan. So what we will look at it is today issue is that intraday trading plan. We'll look at the some aspects of pivot point formula, how to use a pivot point formula, some technical indicators, some patterns, and how to take profit. Now these are four essential places where probably which will help you to firm up a trading plan. Now the simple thing is that without going for the chart, the pivot point formula already you may be aware, and that is based on end of the day data, so you don't need to look at what's going to happen tomorrow. So with the help of the data, you can make up your where the buy levels are likely to come and where the sell levels are going to come. So this can be done with the help of a pivot point formula. And already we had webinars on the pivot point formula, how to use pivot point formula, all those things we have already had discussion the last 1 year or so. But again, just to highlight that pivot point formula, so that you can also look at the glossary also, and then make a call on that. So pivot point formula right now, see, let us say you have high, low, close of every day. Like today there is high, there is a low, and there is a close, right? So based on this high, low, close, what it is, that is what is the average. Average is high plus low plus close divided by 3. So average is high plus low plus close divided by 3. So this is first thing is that you calculate this and keep it. Then let us work out the subsequent support and resistance levels. The first support level, as they call S1, it is 2 into average minus high of the previous day. 2 into average minus high of the previous day. This is the first support level. Now second support level, S2, is nothing but average minus the previous day range, minus high minus low. This is high minus low. Average minus high minus low. This is the S2. Then the third support level is S3, which is average minus 2 into. So normally you will not, generally this particular S3 is very rarely it will be breached. So I think only in the last couple of days, because of extreme volatility, we see some sort of this S3 getting a little bit hurt. But normally if you look at this, S3 is a place which normally will not be touched. S1 most of the times, S2 is possible, but going to S3 is not that easy. So I think S3 can be added as an ultimate stop loss. S3 can be added as an ultimate stop loss. So now we will look at the other the resistance formulas that we have now. So the resistance formulas, we have R1, R2 and R3. Same thing, like R1 is average, 2 into average minus previous day low. This is R1. R2 is nothing but average plus the range, I minus low. This is average plus the range. R3 is average plus 2 into range. So this is the formula which you have to keep in mind, and mostly do not expect S3 and R3 to happen. So you just expect the market to trade anywhere between S2 and R2. So in days when it is very volatile, you must know that probably there is a chance that R2 can come if the market is very bullish. Then probably you can also look at S2 possibly coming on very volatile days like today. S3 may not come very much. Now let us look at that point. We will keep in mind. So we will work out a trading plan for tomorrow. Now based on today's thing, I'm just only going with Nifty, not with Nifty futures, because for understanding purposes I'm doing it. This is investing.com, which we normally use for charting, which we have already told you a number of times. And today if you look at the pattern, we have 11,659, then 536 and 618. 11,659, yes. So that is open is equal to high. Then we have 536 and 618. Okay. So today's thing is, if you look at it, high was 11,659, low is 11,556, 536, and close is 11,618. Right. So the average is all the three plus divided by 3. 11,659 plus 11,536 plus 11,618 divided by 3. This is average is 11,604. Average is 11,604. Now if you look at S1 for tomorrow, now this has closed slightly above the average. So it means that possibly we can have a support at S1 or S2. So S1 comes to be like this. That is, S1 is 11,604 into 2 minus 11,659. 11,550. This is S1. S2 is average 11,604 minus today's range. Today's range is approximately 123 rupees. 123 rupees, right? So S2 is going to be 11,604 minus 123, 11,480. So we will confine ourselves up to this. Let us say the market, if it goes up, R1 is 11,604 into 2 minus today's low, 11,536. This comes to 11,672. Okay. R2 is 11,604 plus range of 123, which makes it 11,727. So this is the formula that you are going to keep in mind, right? So tomorrow, let us say the market opens, and if it is going to open today, it is just closed above the pivot, not much, but slightly closed above the pivot. So open is a very important point. So suppose if the open is going to be below 11,604, which probably is a likely chance. So if the market is going to be below 11,604, so what you do is that you generally look towards, because the market is already going to come down, and if the open is going to be below the pivot point, and close is also very close to the pivot point, not much of a difference, so there's very likely chance that this low can be taken off. This low can be taken off at 11,536. So what you do is that if the market is going to come lower, then in that case you go for a short immediately and keep some high as a stop loss, which is 11,659. So what you do is that you keep 11,659 as a stop loss and short the market. If it is going to come, if it is going to open below 11,604 or below 11,600, if it is going to open, then in that case you go for a short for the market. This is based on the pivot point formula. Now assuming the market is going to go up, then in that case you just watch for a resistance at 11,672. So we have to see, sometimes the momentum will be very strong. Let us say if there is a gap up open. Gap up open means the market opens straight away above 11,659. Let us say the market opens above 11,659. If that be the case, then in that case you need to look towards the buy. And the buy could be somewhere closer to the pivot point, which is 11,604 or so. Suppose if the market opens at 11,659 or 660, then in that case, on any dip towards 11,604 or 605, you buy and keep today's low as a stop loss. So, if there is going to be an open which is greater than 11,659, then in that case, you keep today's low as a stop loss and buy on dips towards 11,604. So, now you have got trading plan arranged for tomorrow. If there is a gap up, you do like that. Suppose if the market just opens a little bit on the downside below 11,600, chance that the low can be taken off. So go for a short, keep today's higher 11,659 as a stop loss. Assuming the market opens gap down, in that case which is below 11,536, good chance that probably it can come to 11,480 and bounce. So if the market is going to go open below 11,536, then just short the market. Just keep some 20-30 points above this 11,615 or 618 as a stop loss and just short the market. In case if there is a gap down open, keep this close as a stop loss of 11,618 and short. So this is how you identify based on the pivot point formula and make out a trading plan. Now along with this, you combine some technical indicators and patterns. Now when I say patterns, what I mean is that mostly we will have two patterns which are very common. One pattern is, if you have most of the days you have either gap up or gap down. You can see a number of days either is a gap up or gap down. This was possible. Or you will have open is equal to high or open is equal to low. This is also a possibility. So for the last couple of days, if you see the open is equal to high and gap down. Open is equal to high and gap down. If that be the case, it is bearish. Okay. So first 5 minutes itself it falls. Now let's look at the chart. See today, let's say 1 hour chart we'll put. This 1 hour chart. So yeah. So today 15 minutes chart we'll put. And put this to Calcutta time. So let's say today the market this is 9:15. So today of course is not the open and high are not the same. But if you look at yesterday and all, it was yesterday for example. Say this is yesterday. Yesterday open is equal to high and there was a big gap. Today also there was a big gap down. If you look at it, there was a big gap down. And the market did not trade above yesterday's close. That's what I'm trying to say. Most of the cases, if there's a gap down, most of the cases it will not go above yesterday's high. If yesterday's close. Yesterday's close was, sorry. This is 26th thing. And 27th is here, I think. 27th is here today. Let us say this is today. Today is open is equal to high. Today open is equal to high, and it was not a gap down. I wouldn't say it's a gap down, but open is equal to high. Sorry. If that be the case, then you go for a short immediately. If that be the case, open is equal to high like this, in a bearish circumstances like this, what you do is that you go for a short immediately and go short below this particular close, below low. So first 15 minutes, just wait and see, and that 15 minutes low is again broken. Then in that case you go for sorry. So you go for a short. So 11,612 is the low in the first 15 minutes today. So that's the pattern we have identified. Open is equal to I and the low is 11,612. Immediately you go for a short below 11,612. Keep 11,659 as a stop loss. So then essentially the market came down and it fell down from 11,659 to 536, which is around 123 points. Now another thing that you normally look at the market on a single day, the high and low difference will be an average of something like 100 rupees, plus or minus some 40 to 50 rupees, something like 40 rupees. So either it will be a minimum of 60 rupees or it could be 140 rupees. So this is the normal range you see in the market, this one, the average will be around 100 rupees. So today morning when it opened with a open is equal to high, which is around 11,659, you can always think that the possibility that the market can drop down up to 11,559. So if open is equal to high of 11,659, there's a great possibility the market can drop down up to 11,559. So now let us say on this day, now just the patterns I'm trying to say, and yesterday also if you look at it, the market opened with a gap down, right? So when the when just opens with a gap down, very great chance, I'm saying there's a great chance that probably it will not go above the previous day close. We have to understand the patterns. I'm trying to mix the patterns along with the pivot point formula. Because right now, since you know there's a gap down, you know that trend is down and you should short. You should short. That's very clear. Now that to short now, open was something like 11,734 or so. So you can just keep some 40-50 rupees up and then short. So 11,780 or so you can go for a short. And let's say it came up to only 11,782. So if the open was 11,734 and it is 11,782, so generally in the circumstances like this, when it is open is equal to this gap is there, market closing above the open by 70-80 points is a little less. So it's normally will not be a bullish day if it opens gap down. So in that particular case, from the open, then keep just 50-60 points and go for a short. Okay. So now at the previous day close is the 11,813 or so. So you can keep 11,813 itself as a stop loss, because that would mean that the market, see, it's around 11,680 or so. So 680, if you add 100 rupees, it comes to 780. If it is 814 or 815 levels, then in that case, it is going to be something like 130, 140 points. And 130, 140 points will be the full range for the day. Will be the full range for the day. So what you can do is that you can keep that 11,812, 813, 815 as a stop loss and short the market on 50-60 points rise from this. So because from the low of the day, you get a point which is up to this. From the low of the day, you can get something like 120, 130 points, because normally it doesn't go more than 120, 130 points. So if the low is already seen today at 11,680 and it's bouncing back, some 120, 130 points hit you can definitely do. So this is one pattern that we identify. And similarly, if you do look at the previous day also, this is on the, if you look at this is the 9:15 or the 25th or so, I think this is on 24th. So open is equal to high. Straight away it fell. Open is equal to high and it was a gap down stock. And already the fall has been quite substantial and quite steep compared to the previous this. So we don't expect this open is equal to high to be penetrated clearly. And so you can keep this high itself as a stop loss, which is around 12,001 mark. And probably you could just go short at any some rally from the bottom. So if the bottom was 11,924, maximum we don't expect about 12,024 itself. But here the high was 12,001, right? So we don't expect the 12,001 itself to be crossed. So you go for a short somewhere from the open, some 40, 50, 60 points up from that. And then after that, when it comes lower, you know very well that there can be this 12,001, 11,924. Good chance that the market can fall by 100 to more than 100 points, which means 19,001 is a possibility. So when you go for a short somewhere, this particular age, 11,964 65, you know very clearly 70, 80 points of profit is there for you to take. So very clearly that you should know the pattern formation, as well as what is the range, what is the pivot point formula, what does the pivot point formula say, then what are the technical indicators saying. So we have clearly identified right now in the case of Nifty, just follow a pattern which is gap up or gap down. Then open is equal to high, open is equal to low. Keep that particular pattern in mind. Look at the pivot point formula, second point. And third is just know what is the normal range for Nifty. Nowadays, normal range for Nifty, high to low. Of course, these days are 125, 150 points, but generally it will be something like 100 plus or minus 20, 30 points. So in a market which is falling, you can expect some 130, 140 points to come very easily. So here if you look at the markets every day, now the fall is something more than that. And on 24, this was on 24th, and 24 there was a big fall. If you look at it, it was 12,000, and it just fell up to this low was 11,813. In fact, there was almost a 200-point fall. So here the fall was much more. So that is something like 200 points thing. But normally you don't see that much of a fall. Yesterday and all was a little bit acceptable thing, because if you look at the 11,792 and 11,640, 150 points. That's what I'm saying, 100 plus or minus 40, 50 points. And again, this today also is 100 plus 140, 150 points on the upside, up to down market. So you must know that in a very volatile market, generally speaking, the range, high to low range, can be something like 140 to 150 points. 140 to 150 points is the range these days. And so we can follow that particular range and take a call. Suppose if it is for 2 days together, from high to low, it can be something more, which is going to be 220, 230 points on a 2-day high to low gap. So now we will just turn our attention towards technical indicators and put this for Bank Nifty also. So now the third point that we are using is the technical indicators. We have already talked about the pivot point formula. We've also talked about the patterns. Now, the third point that we are talking about is the technical indicator. Now, in the chart, you just draw the 20 average, 50 average, 100 and 200 on any time frame that you would like to trade. Let us say we take a 15 minutes or 1 hour, because for intraday, we take a 15 minutes and 1 hour. And if you look at it, the market is generally short. It is below the 200 day. It is below all these things. So on a 15-minute chart, if you look at it, I think the market is very clearly on the downside, because it is below all the major moving averages. So you know very well clearly, if the market is going to rally, it will meet with a lot of resistance, upside resistance up to 11,900. So it has to clear above all these things before it goes up. So tomorrow, what we can look towards is, if it again crosses below all these moving averages, then in that case you can go for a short, because the overall trend is down. The overall trend is down. So what we should do is that we should look towards shorting this market when it is below all these two things. So for example, today, let us say you went for a short. Let us say this was a short today, because it fell again. Yesterday itself it was the short position. So today it went below this, right? So today it was down, and once it was down, then you can go for a short, keeping the previous one, because this is an important, because here the prices in a 15 minutes crossed the 20 and 50 moving average, and then again fell below 20-15 moving average. So if you are looking at a BTST call, probably you would have been even short yesterday itself. You could have been short even yesterday itself, and you could have kept yesterday's this place as a stop loss. Now, in this case of BTST right now, you are doing an intraday. So today it was a gap down and it fell. So what you should do is that you should ideally keep this particular short. You go short. Keep this I as a stop loss. Today markets are very volatile, so you have a very high stop loss figures. But keeping 11,872 as a stop loss, you could have shorted at 11,740 or so. It looks as if 130 points is a very big thing, but right now it looks like that no, we are helpless as far as this is concerned. But if you still want to keep a smaller stop loss, then in that case we have to go for a 5 minutes stop loss. Now 5 minutes average depends on how comfortable you are and what type of stop losses. So let's look at this particular thing, and here also okay. Now what happens is that in this particular case also you have to keep a stop loss only above this, because even here also it looks like that only. We are unable to unable to get a better stop loss. But right now, let us say we are looking at this place. Now the market has gone up. First you are keeping 11,872 as a stop loss. But here the 5-minute chart also, it now goes above all the major moving averages, goes up to 100 moving average. And at this point of time, again it falls. So once it starts falling below this, then you can move your stop losses back to this particular level, which is 11,754. So you could have kept 11,754 after some time. Now, first initially you would have gone short at this place, which is 11,742, keeping 11,872 as a stop loss. There is some upward movement for the time being, and after going up to some place, then it starts falling steeply. Once it starts falling again below all the moving averages, you keep this I as a stop loss. Now, if you have to look at it, look at this market also similarly tomorrow. Now, what happens is right now it is this. So let us say as I told you, it starts falling below 11,600 or so. Let us say it starts falling below 11,600 or so. Then you can even keep 11,640 or 650. That is today's bounce in the afternoon. 11,640 levels itself. 11,641 in that I'm talking about in Nifty. You can keep 11,640 itself as a stop loss and proceed and go for a short. So you keep 11,640 as a stop loss, and in case if the market is going to open a little lower tomorrow, then in that case you keep 11,640 as a stop loss and short the market, because here on the 5 minutes chart, it has moved above all the some of the important moving averages 20, 50, and 100. And again, if it is going to fall below that, then you can keep that as a stop loss and go with the intraday trading plan. So tomorrow it looks as if the market is going to open lower, then you're going short with 11,640 as a stop loss. 11,640 as a stop loss. Probably you can do that even in a 15-minute chart also, the same thing, because here also it has moved above the 50 moving average and all. So if the market is going to fall, I think probably the first thing, it may take some support right up to 11,580, 590 levels. So if the market is going to open below 11,588 or so, so let us say the market starts slipping below 11,585. If the market starts slipping below 11,585 tomorrow, then in that case what you do is that you go for a short and keep 11,640 as a stop loss. So anything below 11,585 tomorrow is a place where probably you can look towards going short, keeping 11,640 as a stop loss. Now we have already worked out the trading plan, where S1 is 11,550 and S2 is 11,480. So let us say the market opens tomorrow below 11,600 or so, then you can expect some 130, 140 points or 120 points fall, which means 11,480 can be an important support, which means 11,480 can be a very important support. So this is how you keep working in the market. And let's look at this particular thing with respect to other things. So how you take the profits? I told you that tomorrow look at S2 as a question of taking profit. So you must know the trend. Very clearly the trend based on today's thing is it is close slightly above the pivot point, which means it is okay, not bearish, not bullish, but somewhere average. But at the same time, the market has rallied on a 15-minute chart slightly above the 20 and 50 moving averages. So the overall trend looks to be down, because the overall trend is that it is below almost all moving averages. Maybe just 200-day moving average took some support. So probably the overall market is down and the overall sentiment globally is bad. So if it is going to open down tomorrow, then in this case it becomes a short case. So you are shorting the market, keeping 11,640 as a stop loss. So where do you take the profit? Either S1, which is 11,550, very close to today's thing. Second point is that to take somewhere around 11,480 levels. So I feel that 11,480 could be a probable area where probably support will emerge again in the market. And so you can take support at 11,480, you can take a profit, which also would have meant something like 100 points high to low range. So this is how you work out your plan and keep your plan ready for tomorrow. Now we can look at that same thing with respect to say Bank Nifty, or we can look at Bank Nifty right now. Bank Nifty, this is a 15-minute chart. So on the 15-minute chart, Bank Nifty also still down, because it is yet to clear the 200 moving average as far as the 15 minutes is concerned. So 15-minute chart is the overall trend looks to be bearish for the intraday. But at the same time, sometimes the momentum can just start building up like this. So you need to wait patiently before you go for a delivery for a sell. So what we can do is that we can wait to see whether there is any retracement up to 30,050 levels, some 150 points of fall here. So if it is going to fall below 30,050, then in that case you can go for a short, keep today's high of 30,200 as a stop loss. You can keep just to 30,200 as a stop loss and short the market if it is going to fall below 30,050. Now similarly, like what we discussed about the average range. The average range for Bank Nifty, if you look at it, let us say the average range, true range, average true range. This is the 14-day average true range, and so if you look at the average range for Bank Nifty for a daily chart is concerned, it's something like 435 rupees. Right now, its average range is going something close to 435 points. So 435 points is the average range right now, and so if you look at the today's situation also, see the it was also high, open was also high, and if you look at the fall, it was around 30,266 to 29,921, which is almost 340, 350 points. So now it's around 435 points. So it was around 350, 360 points. So slowly Bank Nifty is slightly performing better than Nifty, I would say, because Nifty has tested below the this one, that is the previous low. But Bank Nifty is just not going below the low, which means there seems to be good amount of support that is likely to come as far as Bank Nifty is concerned. So let's look at the relative strength index and RSI to see whether there is any divergence coming shortly. Bank Nifty so probably any fall in Bank Nifty, I think probably we should get some very important support close to 29,750. So because the pace of fall as far as Bank Nifty is concerned overall, it is diminishing. It is diminishing, and it is taking more time to go below this particular low. So which means that Bank Nifty is probably poised for faster revival, and which will be also helpful for Nifty as concerned. So I think Bank Nifty on any dip looks to be a very important thing that where we should look towards buying. And so any dip which comes very closer to the 29,600 or so seems to be a good place where we can look towards going long here. So that's as far as Bank Nifty is concerned. So we should be very clear to buy Bank Nifty at those particular point. And at this point of time, markets are stressed, and at the same time, we need to be very clear that we should not also panic. And these are good opportunities to go for a long-term investment. So for an intraday, I think the market is still look to be on the downside. So we should be in a position to look towards some sort of shorting opportunity again if in Bank Nifty it's going to go below 30,050. So how did we use this? We just had a 15 minutes chart, and in 15 minutes chart we placed all these indicators and then decided that where we should look towards going short. So if it falls again below all this 20 and 50 moving averages, we go short, keeping this particular high as a stop loss, like what we did for Nifty. Now in Nifty we calculated the pivot point formula. You can also use the pivot point formula here. Third is how to take profit. I told you that normally the average range in nowadays in Nifty is 150 points. We don't need to keep 150 points. We can keep some 120, 130 points for the time being. Similarly, in the case of Bank Nifty, I think right now the range is around 430, 450 points. You don't need to keep that. You can keep up to 350 or so as a range probably. So if the market starts falling, then tomorrow there is a chance that probably we can get it towards some more points on the downside, and that will be from whatever open that it is tomorrow, or whatever this open is equal to high if it is going to happen tomorrow. From there you subtract some 350 points and keep that as a place where to take profits. One. Second thing, like in Nifty we have calculated 11,480 as a S2. So similarly in Bank Nifty also you can calculate it S1, S2, R1, R2 and keep that, and at that particular place you can take profit. So you are now use the pivot point formula now. So how we have got the trading plan ready? We have got the trading plan ready by first looking at what is the high-low close of today, and based on that we are looking at what is the range for tomorrow, what is the probably the R1, R2, S1, S2 average levels, One. Second thing is we have also now know what is the average range that is there in as far as Nifty and Bank Nifty is concerned. Third thing is we have also looked at the chart, and in those chart we have also looked at the technical indicators, and we have just used the 20, 50, 100, 200, and we have used the normal charts which are the Nifty and Bank Nifty. Nifty and Bank Nifty we have used in investing.com. We have just plotted that. So it's very simple. This you can now, tonight itself I made my plan. If it is going to go below 30,050 tomorrow, Bank Nifty, I will go short, keeping this the 30,200 as a stop loss, and keep somewhere around from wherever it opens that particular high. From there I will keep something like 350 points to take profit, or the S2 year. Similarly, in Nifty, if it is going to go below 11,585, I am going to keep 11,650 as a stop loss, look towards taking profit around 11,480. Simple. This is how you just work out your calculation and keep that calculation ready, and that will finish off. So this is taking profit. We have seen, we have looked at the patterns. Patterns are open is equal to high, open is equal to low, along with gap up, gap down. If it is going to be a gap down, then it is bearish. So where do you short? You short at some place where probably in case of Nifty, if it opens from wherever it is around 40-50 points, if it's a gap down, they short at 40-50 points above the open. Okay, short the market. Or otherwise just wait and see whether the market is falling below using the technical indicators. If you have got it, then the chart. So just keep that 40-50, look at the chart and place the stop loss if it is going to go below all the important averages. That's all it is. So now we look at same thing. You can look at in commodities also. So let us say look at the crude futures. M6. This is what we have as far as the MCX chart is concerned. Crude oil is also looking extremely baddish, and again, if you look at this, is a 15-minute chart. So what happened is that in a 15-minute chart also, if you look at it, it just went above this particular 15-minute chart and then started to come down. So right now we are short. We are going to keep this I as a stop loss. That is 34.75 as a stop loss. Right now, yeah, it has fallen so steeply that no, it is 33.57. So unfortunately, the stop loss is coming a little low. In fact, if you had looked at 1 hour or so, or 2 hours or so back, probably we could have shorted it a little earlier. So right now, any pullback has to be shorted, keeping 34.75 as a stop loss. So any pullback which comes slightly around the 34.10, 34.15 mark, I think is a place where you can go short by keeping 34.75 as a stop loss. So any pullback right now, you can consider going for the short, keeping 34.75 as a stop loss. So right now the fall is a little unabated as far as the market there is concerned, and probably that is because of the coronavirus problem. And so you can go for the short, keeping this particular high as a stop loss. So let's look at the gold. How do we look at gold futures? Gold MCX futures. Gold. Okay, gold mini futures. Okay, now this is a 15-minute chart, right? So what right now the gold is that no, this particular thing is an important stop loss for any short position. So any short position in gold, I think you should keep 42,655 as a stop loss. 42,655 as an important stop loss. And if you're going short, you can go short. Probably my suggestion is that if you want to go short in gold, go short below this low. Go short below this low, which is 42,383. 42,383, and you can keep 42,642 as a stop loss. 40,645 as a stop loss. Go short below 40,383. So somewhere around 200, 250 rupees. So something like 0.5% you need to sacrifice. So below 42,383 with a stop loss, above 40,645 you can consider. And in case you don't want to wait that much of patience, then in that case you should decide to go short right now itself and keep 42,645 as a stop loss. Alternately, suppose if the stop loss is triggered, then you should also be in a position to buy above 40,645. That is, you should short right now, keep 40,645 as a stop loss. So if 40,645, 650 is taken off, go long again and keep 42,380 or so as a stop loss. So this is as far as the gold is concerned. So gold looks to be, so in the 15-minute chart, what we have done is we have just placed the moving averages. And this moving average, which is 200-day moving average in a 15-minute chart, is coming close to 42,700 or so, close to right now. And so either the market is on a cat and wall, either it can come down or it can go up. So the best way to look at it is that wait patiently till 42,645 is crossed to go long. If you want to go short, you can even go short right now, but keep 42,645 as a stop loss. Those who are conservative can wait for a short which is below 42,383 and keep above 42,645 as a stop loss. Now, if you look at the average indicator here, let me look at the average 2 range. What is the average 2 range here? Average 2 range. So average range in right now in gold is around 540, 550 points for a single day. So 540, 550 single point can happen at any point of time. So which means today the range is extremely low. We have only 42,320 and 40,655, something like 330, 320, 330 points. Possibility of another 200 points on the upside is possible, or 200 points on the downside is possible. But I would bet it to be on the upside, because now the market is likely to take support at this particular level. If you look at it, there is a support which is coming here. Okay, so this support is a very crucial support that we are likely to have. And hence, it's better that you don't go for a short punch, because probably if this is going to take above this high, which is 42,725, which is yesterday's high. So today I'm saying about 40,640, 650 itself, right? So if it goes to above 40,640, 650 itself, I think we are going to be on the long side, keeping today's low as a stop loss, which means there is a good potential for the market to go up. So gold still seems to be on the upside, and there is no necessity to short gold, but just wait for this one, that is this particular point to be crossed, 42,000. This is the 15-minute chart, and in 15-minute chart, wait for this particular high, which is 42,655 to be crossed before you go long. So on gold, be ready to go for a long out for above 40,655. Even if you're going to take positional call, maybe it will work out, but in these days volatility is so high, so you have to keep 42,320 as a stop loss and work out your long position as far as gold is concerned. Crude oil is concerned, it is bearish. So for those who are in a positional call also, or an intraday call also, in the case of crude oil, just wait for some rally to come back and then short with 34.75 as a stop loss. In the case of gold today, if you get a move which is above 40,655, you just go for a long. Just go for a long, and we may get another 200 points on the upside, because the range is around 500 points. So 42,320 has been the yesterday's, today's low. So there is a chance that you may get up to 42,855 or so. That possibility is there. So probably a 200 points upside is still possible for the day if 42,650 is crossed. So this is how you work out a trading plan, keeping in mind the patterns that are emerging, the period point formula calculation, the technical indicators placed on a 15 minutes or 5 minutes or 1 hour chart, and then knowing what is the range of a particular asset market. We have now illustrated this in Nifty, Bank Nifty, crude and gold. We can do that in other commodities or stocks or other asset markets also for intraday. So with this we can easily trade the market, and I hope this session was productive. And tomorrow we will have a session on options. So now time is close to 7:45. So I will wait for your questions now. Thank you. So hope you have some questions to ask, and at any point of time in future webinars also you can ask. We will be revisiting these particular sessions again and again to illustrate in commodities as well as in equities. So you can always ask. So we'll close for the day. So thank you, good night, and let's meet again tomorrow. Thank you very much. Good night.